JJ, we can start, right? You're on mute.
Okay. Sir has just joined, so we are starting now.
Oh, sorry. Okay.
Okay. Will you start?
Yeah.
Good afternoon, ladies and gentlemen. I, Neha Bahl, Company Secretary and Compliance Officer of RACL Geartech Ltd, welcome you all to the post-results conference call of the company for the first quarter of the financial year 2024-25. I shall be your moderator for this call. Before we start the proceedings, all the participants may please be informed that this conference call might contain forward-looking statements about the company which are based on the beliefs, opinions, and expectations of the company as on date of this call. However, these statements are not the guarantees of future performance and involve risks and uncertainties that are difficult to predict. Further, you may please note that all participant lines will remain in listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. In case you need any assistance during the conference call, you may post your concern or query, if any, in the question answer box, or you may raise your hand as available on the screen if you want to speak during the call proceedings. Lastly, please note that this call is being recorded. We have today with us the management of RACL Geartech Ltd, represented by Mr. Gursharan Singh, Chairman and Managing Director, along with Mr. Jitendra Jain, Chief Financial Officer, and Mr. Prabh Mehar Singh, Vice President, Finance and Business Excellence. I now invite Mr. Gursharan Singh for his opening remarks. Over to you, sir.
Thank you, Neha. Hi, friends. So it's good to interact with you. Almost every 3 months now we are maintaining this pace. Thanks to you guys for suggesting this investor con call a couple of years back. So it really gives us a good platform to interact with each other. So there are good times, there are not so good times, there are happy times, there are challenging times. It's always better to share everything what's happening around the world and of course within 4 walls of RACL. So definitely you must be eagerly awaiting our interactions with you subsequent to our Q1 of FY'25. Obviously numbers are with you and all details. Jitendra Jain, CFO, and Prabh will give to you. But I will only set the pace for today. You know, there are challenges and actually they are global challenges. This is not India specific. This is not RACL specific. It is not any country specific. It is basically global challenges. And since you are from the investing domain, so you must be knowing which way the world is going and how things are really moving. Thankfully, the actions which you have taken in previous years, they are helping us. We are still maintaining the pace of growth. Okay, that's a different thing that we may not grow this year as we grew all these past 2-3 years, but still we'll be maintaining the growth. But one is very clear that I always say, when going gets tough, tough gets going. We are a tough person, we are a resilient person. Definitely, these challenges are temporary challenges and things will really take off in a right way. Although, while Prabh shares all the presentations on the present performance and the future forecast. So definitely, things may not be as we were seeing a few months back or 1 year back, but you know, market is always volatile, and probably I said a few years back, about 10-12 years back, McKinsey coined a new buzzword, VUCA. Volatility, uncertainty, complexity, and ambiguity. And it was somewhere in 2010, 2012. At that time, we were not really understanding how strong this MUCA will be there. But now it really reflects. Yes, operating conditions, business conditions are very, very volatile. Sometimes it really touches the roof, then it really doesn't maintain that pace. And there is a lot of uncertainty what is happening today. Nobody knows what will happen tomorrow. And every day there are new challenges. Sometimes one geopolitical things heats up. After a few months that goes down and some other geopolitical things happen. Sometimes Red Sea crisis starts coming and all sorts of actions are happening. And there are many such issues. Obviously, during the discussions, we'll be deliberating. But I will only say we are on a strong ground and we are really going to maintain our strengths. And we always have maintained that keep expanding. We always say keep expanding, not only in terms of revenues, in terms of technology, in terms of business diversity, in terms of diversity of customers. So every time we add new customers, every time we add new product portfolios, every time we add new technologies. That is really helping us now because these investments or the decisions which we take a couple of years back, so those things are really helping us now that, okay, we are not growing at the pace which we grew in previous 3 years, but yes, we are still maintaining the growth path. To what extent the effect will be there, although only time will tell. But yes, definitely we are going to always remain a growing organization and we are always going to remain an organization with full interest. So definitely during the discussions, we'll be taking it up further. But yes, I will now really invite, first of all, Prab to make the presentation so that it will answer, because I know many of the friends have given some queries in advance. So this presentation will answer many of the queries. But subsequently in Q&A session, if there are any open topics, we'll still try to maintain. So, Prab, that's what's from my side, and over to you now. At least you can start making the presentation, then we'll take it forward. Yes, over to Prab.
JJ, you want to run through or should I take end to end?
Prab, you can take it forward.
Okay. I hope I'm audible correctly.
Yes.
Yeah.
Okay. Can you put on the presentation mode, Neha?
Yes, sir. Done, sir.
Yes.
No, I don't. Still, I think it is showing the normal screen. आपको दिख रहा है वहाँ
Sir, is it
presentation
visible?
mode में?
Yeah, visible. Yeah.
No,
Acha.
Prab, sir, is it visible to you?
It is visible, but it's not in the presentation mode. It's on the front page. एक बार उसको screen को share बंद करके against.
आप इसको पीपीटी मोड से एग्जिट करो, एक एक करके शो करो. कई बार पीपीटी मोड में चलता नहीं, ऐसे शो कर. Yes.
No, but what's the point of PPT then? Wait. Neha, you
Now it's
sent the
okay?
email to me also. No, wait. Yeah, now it is okay. Yeah. So of course on the number. Yeah, it is visible now. Yeah, okay. You're on the sales slide. So good afternoon, good evening, everyone. Thanks for joining this call. Today we will be, of course, talking about the Q1 2024-25 numbers. Along with the numbers, we will also explain. I believe there are many questions and rightly hesitations regarding the Q1, especially on the profitability part, on the margins part. We'll explain the reasons for that. We will then, of course, cover the trend which is now setting in the automotive scope. In the last 3 to 4 months, I and Sir have both been traveling extensively to the Europe. We, of course, have met our potential customers, our existing customers, trying to assess what the next 6 months, 1 year lies in front of all of us. And then we will, of course, cover what measures the company is taking to counter those headwinds, if we can call that. And then in the end, we do, of course, discuss the future, since that is one thing which is always very promising with RACL, that despite whatever challenges we keep facing, whether it was COVID or any other, Red Sea or something, the future always is promising, and we have certain uh, uh, news to share as well, certain developments. So we'll try and cover all of these in this presentation, and then we talk about the questions if you have any, which I'm sure you would. So on the numbers, yeah, of course, this is clear. We did a sale of 105 crores, out of which export sale was around 68%, which is 71 crores. And the remaining was domestic and the other income, what contributed to this quarter of 2024-25. So 32% was domestic, 68% was exports. The budgeted sales for this year, for the quarter 1, so our internal budget, which we present to the board, was around 125 crores. So by our own budgets, we did around 20 crore less to what we had anticipated. On the margins and the numbers, when you compare year on year, that is a standard way of comparing the quarters. So of course, the sales grew by 18%. However, the EBITDA, the operating profitability, and the profit before tax uh, saw a moderate decline in the EBITDA and a sharp decline in the profit before tax for the year, for the first quarter. Of course, we have written some of the reasons what we believe became part of it. Of course, these are not exhaustive. There are many more, but these are the core reasons why we believe this numbers could have been better. So this is something you all and we all have to understand. RACL is a growth company. So in a growth company, there are many aspects which have to be taken into consideration looking at the long-term horizon. So when I'm hiring people, when I'm investing into the plant and machinery, it is with a vision for at least next 3 years. The investments what we did in 2019-20 is the reason what we are coping these benefits today. So investments which I'm doing today are not the investments for tomorrow. It is for next 3 years, 4 years, and the benefit starts coming 3 years after that. Similarly, the manpower, the plant and machinery, I keep growing. It is, of course, for the short term, but for the long term also, you keep that because you have to train the people, you have to keep people on the on-roll activities. When the load comes, it should not be that because of no lack of training or lack of resources in the employees, that should not create a hurdle. So there are many things which are planned, invested, keeping all those things in mind. Now, when you don't grow as you anticipated, things will hurt you in the short run, and that is what you see in the quarter 1 for this year. So, of course, the first point, as you say, that because the turnover what I budgeted for the first quarter, we could not achieve. The reasons we will, of course, explain in the when I finish these slides. Uh, Second, the domestic sales in this quarter as compared to exports, the growth in the business, so that 18% growth, what you see, the exports has not grown, but the domestic business has grown this time. So of course, the domestic business has a higher contribution of raw material because the margins are not too good. Here you are competing with a lot of other Indian companies where the complexities might not be too high, because in the Indian market we are working for the three-wheeler business, or even in the two-wheeler we are they are not sports or high expensive products, so they are volume products, so there the margins are not too great. Second, being again part of the company which has 22 different customers across 6 different verticals of the industry, that includes automotive, off automotive, what we call is agricultural, then we have the commercial trucks. So every 3 months or every 6 months, we do not have the same business with each customer. So in some quarters, might be my two-wheeler business is growing, but my agricultural business will be declining. In some quarters, my pass car business will be growing, but my commercial trucks will be declining. So when you compare the quarter of last year, which was 8 2023 24 first quarter, there when you compare, you see the consumption, the RM compared to both, there is a 3% increase. And that 3% increase is not because that suddenly my RM cost has increased. It is, of course, there has been some inflation into the steel price, but it is also because the product mix. In our organization, product mix plays a very important role because I am working, as I just explained you, for commercial trucks, maybe the products are heavy that gives a higher turnover. For example, MAN trucks is a business which is growing very much, but these are normal engine gears, not too complex, but they are heavy parts. So the ratio of the steel in these parts is higher, the value addition might be lower. But if my pass car, suppose my ZF business grows there, the margins are higher because the RM content is less, the value addition is higher. So quarter on quarter, this does play the role, and that is why in the EBITDA, that this quarter we are seeing that despite growing by 18% in revenue, maybe the RM consumption also grew by 3% because the product mix was different. Third, and this is the reason why this will cover the first point, why there was a 20 crore decline or what we budgeted could not be achieved. This was a worrisome factor for us as well. There were certain immediate inventory reductions which we received from a couple of customers, wherein we had confirmed orders. The parts were under packaging actually and shipment, and suddenly the customer says that there has been an inventory planning failure at their end, or maybe the inventory correction, what they would have gone through, and then they decided not to pick many of our goods, or maybe they suddenly reduced the schedules. So that has been the scenario in the European market, what we are seeing from, I would say, May to June onwards. There were headwinds which we were always facing in the last 6 months, and of course, the reasons we'll explain in the next slide. But that 20 crore anticipated sale, what we could not deliver or convert, but that, you know how complex our operations are. For a part from the steel to reach the final goods, it crosses through maybe 20 operations, and the 21st is the parts being packed. If the 21st operation does not happen, I book all the expenses for the production, but since I'm not invoicing, so then immediately my P&L gets disturbed. So because of that, there was a lot of high tooling consumption. So of course, the biggest cost after RM and manpower is the tool cost, and we have very imported, complicated toolings which are expensive. So when you're consuming the tooling but not converting that goods into finished sales, that is something which also contributed to a certain spike in the operating margin, sorry, certain decline in the operating margin. Uh, and then, of course, the outside vendoring. So I am having a lot of vendors who are working for me. For example, the forgings, I'm doing some blanking, some machining, which is outsourced. I have a heat treatment supplier who's doing many heat treatment for us. So these are all processes which became part of the final product. Now, again, if I am not selling what I budgeted, I'm consuming everything, but that sudden decline in sale is something which could not be converted and increases the percentage of the cost into my profitability. And this is on the operating side, why this EBITDA could have been better. Uh, will this be short term, or will this also spill over to the next quarter? We will cover that in the next slide. On the profit before tax, the main two contributors, no, go back. The main two contributors are, of course, the depreciation and finance cost. Depreciation, as you know, being a growth company, you of course know we have invested a lot, and that depreciation expense is something which will remain part of it. And if again the sales would have been higher, this would have been taken care by that. And the finance cost, working capital being an export oriented, there the increase has happened, and that is something is what contributes to decline in this profit before tax. Now we can go to the next slide. Now, this is what we have tried to cover, some of the key expenses, what I have tried to give you. Now, when you compare the performance from quarter one of last year, the EBITDA looks around 4% down. But when you compare the quarter four, so I would say we would have a stable quarter or a stable quarter four versus quarter one. And the reason is what I explained you. You can't hold a growth company having 1 year old cost patterns for the new businesses or the new quarter or the year which is running, because last year my costs were different. Now when I'm poised or when I'm planning to grow 37%, I have invested for that both for the short term and the long term. Now, if that doesn't happen, that the cost actually cannot be compared quarter on quarter, maybe of a year old cost structures, right? For example, if you see consumption side, actually quarter four versus quarter one, I have improved in my margins in terms of my gross profit. Employee benefit wise, I have, yes, there was an increase. And the reason is, as I explained you, last financial year when it started versus now, I would have added more than 180 or maybe more employees, both contractually and third and on my role, maybe 200 plus people. So that's a fixed cost which has increased because of the business which I have planned for this year. Now, if you compare the last year's expenses, I had 200 less people. Now, this is not a company which grows 6% and then, okay, I have same employees. This is a growth company. So these things will shift. And that is why the management has to be very quickly adaptive. And I'll explain you in the coming slides how these costs we are trying to navigate. But quarter four, if you see, the employee benefit expense has changed drastically. Finance cost I've explained you. See, manufacturing expenses this time even 18% growth happened year on year. But if you compare Q4 to Q1, I think the number wise we did around 103 crores. This time we did 105. So we have tried to maintain that same balance. So quarter on quarter it is not reduced that much. So this slide
just a minute, I'd like to add one more thing over here. Like yes. Particular employee benefit expense, you see, although we increased our revenue as compared to Q1 of 23-24 by almost 18%, but our employee benefit expense has reduced by 0.09%. Why there is an increase of 1.55% from Q4 of 23-24? That we have been given the increments.
Yes.
So it really shows that our Q1 performance of 23-24 reflects higher efficiency or higher utilization of employees. So because with the same employee benefit, because Q1 of previous year and Q1 of this year, last year also we gave the increment, this year also was a further increment. So that further increment we have absorbed. Apart from that, we have grown almost 18% in revenue as compared to previous year. But we have been still able to maintain lower employee cost. So this shows actually our operational efficiency, and this is how that because all the processes are not stabilized. So this really shows that our operations are getting more and more efficient now. So this was just to highlight on them, because one of the query was on there, our operational efficiency. I'll rather say this sheet itself.
No, the next sheet also will explain that. That's the whole point of this sheet to happen. So exactly. What I'm trying to give a message to the people or the investors is that there is a slide in the end which is a quote by someone that should explain the entire summary. But point is, you need to have a very different mindset when you're dealing with growth companies. Sometimes the panic word is used very often, but one has to go deep dive when someone assesses growth companies. So there has to be.
Your voice is not.
Your voice is cracking. Yeah.
Cracking.
Okay. Is it better now?
Maybe you can.
We are missing you in between.
Maybe you can rejoin.
You are missing me, I know, because I'm far, but
no, I think I'm saying.
No, I know.
The voice.
Yeah. Okay.
I think now it's better. Now it's better.
No, now it's okay.
Now it's fine.
Okay. Everybody else is saying it's fine. The voice is fine for everybody else. Maybe you can write in the chat.
Yeah, it's working now.
Okay.
It's okay now.
They're saying it never cracked for us. So maybe JJ, you check net at your side, yeah?
Okay.
No, now it's working fine.
Okay. Yeah. Go to next slide, please. Okay, so this is, of course, you guys are better than us in this, but we've tried to give certain, what I would say, what we are feeling, getting the feelers from our customers. We are witnessing that there has been sudden reduction in customer orders because there has been huge inventory at dealer side. And this, most of the inventory reduction, I won't name the customers, but most of our customers who have huge operations in the United States, because of course the plants might be in Europe, but their higher customer base is in US. The top three of them are, I mean, the main customers who are declining for us, they are getting their decline because of the high interest rates in US. Most of them are not able to sell their products there because of the reasons the inflation has been really high. And after COVID, I think one of my customer was in my office yesterday. He's one of our biggest customer. I asked him, I said, I have an investor call tomorrow. I can understand on the PAS car, I can understand in the Europe, but you are a two-wheeler manufacturer. Why are you not selling? And he gave a very good point. He said that in US, in COVID, he said, I have sent fully made bikes into the air freight. And I sent around 61 motorcycles to US because my plant could not deliver through sea. And we have sent people motorcycles actually via air because that was the rush people had. And after COVID, when I say after 22, 23, a lot of inventory was built at the dealer level. And now somehow because the interest rates, because working capital management is something which everybody wants to improve, since that inventory is actually the working capital cost. Now they are wanting to reduce those levels because of the imminent, the slowdown, what is happening in the Europe and the US. So that is one reason why we are seeing this short-term decline at the customer end. Second, as I said, the economic slowdown in China and US. So of course, if the rate cut happens in US, maybe the short-term demand should increase. But otherwise, in general, the inflation rates in Germany have started to stabilize. And this we also witnessed that even in US, the inflation numbers have come down. So that ways we believe that should be something which we should be short-term. The next important aspect, which is, I don't know how other companies are reacting, but for us, we are facing or seeing this, that the consumers, at least in the European context, I can't comment about China or the developing because we don't deal there, are actually in the wait and watch mode. Most of them are deferring their purchases because they're not sure on the technology. E-mobility somehow is not getting that traction as it was anticipated. To give you an example, Mercedes has actually gave a statement in the public forum that they will not invest on the sports car platform anymore. The AMG versions of electric they will not launch. Uh, Volkswagen, the e-tron, again these are public numbers. They are not able to sell any of their cars, so they are now very in a quick fix. Most of their diesel engine technology they have sold to Skoda. So Skoda is selling a lot of products, but VW itself invested heavily on ID3, ID4 models. Nothing is selling for them. Similarly, many other car companies are facing this heat wherein the consumers are not sure. Maybe should they go for hybrid? Should they go for the hydrogen is also being talked. So that is where I believe some of our projects did not pick up, for which we have invested. Recently, one of our customer launched an electric scooter in India. The scooter is for 15 lakhs. I don't know how much they're able to sell. So such kind of electric uh, platforms, the adaptation, what the consumers expected is not happening. So of course, a lot of questions 3 years ago were, what are you doing in electric? Now we are actually doing very much in electric, but what actually, at least we feel that most of our projects, uh, can you hear me?
Yes, we can.
Okay, somebody wrote that they can't hear us. Okay. So that is something which is we are facing certain kind of volatility in that demand because sometimes they ask us, can you send via air? And 3 months after that, they immediately want to reduce because the planning at the customer end is something which they're not able to plan. I'll give you another example without naming the customer. They gave us a number for their product roughly around 90,000 for this year. And now by the eventual half year which has passed, they are now maybe saying only 45,000 is what we can get. And they actually invested themselves a lot in this. And this was an electric, not electric, but hybrid platform, a pass car was there. But suddenly they could not really do it. So there are many things on the EV side because of which we believe that the automotive landscape is seeing certain headwinds. And yeah, I think remaining points, if sir wants to add a point, then I'll go to the next slide.
I will also like to add over here. If you really remember that.
Not able to hear. So they are not able to hear.
No, they can. We can hear. Maybe that person has that problem. It is fine,
okay.
JJ. Yeah.
So I will just like to add what Prabh has said. That past couple of years we were always saying that electric mobility has to actually be handled very carefully, and that way we are very lucky, and we are very that our strategy worked, because many times in previous calls people were really pushing us that why can't you really go in electric mobility in a big way, but we were maintaining a very cautious approach. We invested in electric mobility, but generally on such platforms or such product which can be adopted easily to the e-mobility or the hybrid segment also. But now there is a biggest one more challenge, because as Prabh told that we traveled to many European customers in past 3 months. Actually, what happened, all pass car makers focus in past couple of years only on e-mobility. And they do not have new product offering in ICE engine or hybrid segment. Now situation has come that EV is not selling. And in ICE engine, they do not have many new platforms. Because, technically speaking, customers don't change the car that cars have run down, because car can do now even 1,000,000 kilometers. And people change it, some new features, some new designs, new styles, and all such stuff. Unfortunately, in ICE engines, really that thing was missing. Now all pass cars are working back on their drawing boards to enter into big way into ICE engine and hybrid segment. And I will be really, in fact, in coming slides, we have already covered also. We are getting new RFQs again for ICE engines, new gear ratios, new speeds, and all such stuff. So, this e-mobility has actually really, I will not say that e-mobility is not going to remain, or e-mobility is going to replace ICE engines, but this has actually eaten out some of the demand from the market, where people have delayed their decision. They said, okay, we can change it at a later. Because, in US, every 1,000 person, almost 562 cars are there. So it's very clear that not many new customers are there in US to purchase the cars. But replacement is a big business over there. Same is in Europe. Europe also 400, 500 per 1,000 is the passenger car penetration. So the replacement actually has gone a bit sluggish. First of all, wait and watch for EV. And secondly, not many new product platforms for the ICE engines. But now things are really going to shape up very fast, because more than us, all the pass cars makers are also really concerned about this, how to maintain their own growth numbers. And I'm pretty sure that very soon things will really bounce back to normal. Something similar is in there in the motorcycle business also, because as we have written also, our business always remained for premium segment of pass cars or motorcycles. In motorcycles, it's very clear now that ICE engine is going to stay, e-mobility is not going to stay. Like one of our major customers, I can even name, it's on a public domain. BMW Motorrad was thinking to put up a motorcycle equal to 1,000 cc of ICE engine in electric mobility. But they scrapped this project. They say, sorry, we have done the survey that high-end motorcycles will not sell. So eventually, ICE engine, now it is clear that in premium segment of motorcycles, ICE engine is really going to stay a lot. But the only thing is, this period has really eaten up a lot of capacities from the demand from the market. Yeah. So yes, Prab, now you can go to the next slide.
Yeah, so just last point on this. So basically, right now, whatever these inventory corrections, as I told, most of our customers suddenly asked us stop sending. The good or the bad part in Europe is that before they go to holidays, they don't think. They just want to delay that decision making. So right now we do not have the extent of what these slowdown or what these short-term corrections will be. But slowly and steadily now most of our customers are opening up. Just before the call, I got an email from one of our biggest customers that one product which they deferred for 6 months. Now they have started asking that, okay, can you send this much quantity? Can we do slow ramp up? So slowly things are coming back to shape because, as sir said, maybe their end customers, they are tinkering a bit on the platforms, maybe planning some price cuts on the cars or something else on the motorcycles, since this US elections also is now on almost, it's clear who's going to go which way. So maybe people are able to comment on that. So right now, whatever that short term demand reduction it is, we are still also calculating the impact, but in the next couple of months it should be clear how this looks like. H1, which will close in September, we believe that H2 should be at least 20 to 25% higher than the H1, what we will close. So that way, the bad part of the 6 months is almost over. The next 6 months, which will come from October onwards, because Diwali also, we believe domestic should improve. So the H2 should be, I think, 20% higher than the H1. And in total, H1 plus H2, what that will be, it's still early for us to comment. But that anticipated growth of 37%, that of course will not be there. But what it will be, maybe in a month around the AGM time, most of you are shareholders, maybe we will have more clarity by then. Okay, so next point.
Next slide.
Sorry, next slide. So now we have to manage. We can't sell the products for our customers, but we can of course improve internally. Maybe JJ, you want to run this slide since most of this is. Yeah.
Sure. So thanks a lot. So seeing the indications and also for last 2 to 3 months, we have already started taking, and as Prab correctly said, that maybe selling to the client may not be in our hands, but getting more efficient and work in better and more efficient manner is something which can be looked at, and which is the culture we are trying to reinstate basically. So we have taken, as we had explained, that areas which would have impacted our profitability and all, or indirectly cash flows and all. We have already taken steps to manage the same. So first part is on the working capital management. Now, as we said, that working capital management consists of inventories and receivables and payables. Now, receivables, we are dealing with all big OEMs and all. So, and with them, the payment terms are already fixed, and we are not seeing any delay in any payment from any clients. So, receivable side, there is a limited scope of improvement. But on the inventory side and on the supplier payable side, we have already started taking these steps. So we have already set up a task force internally, and we have started a close monitoring of our inventories, and we have already taken steps. So as in our inventory, we basically have inventory of steel, which is raw material. We have inventory of blanks, and we have some inventory which is with our job workers. We have set specific targets for all these three kind of inventories which we have, and we have already set the targets, and we have discussed the scope, and we have already started implementing the same to reduce our overall inventory levels. We expect, but yes, because since our prime raw material is steel, and there are many specific grades of steel which we need to procure, which are ordered in advance. So whatever is ordered and all, that can't be changed, but we have already put in checks and controls and all to bring in more efficiency on the inventory management. So we are expecting this task force to start delivering results to us in next 2 to 3 months. Second thing is, we have already started renegotiation with our suppliers to increase in our payment terms. Now, we have been dealing with quite a few suppliers for a long time, and the way we have grown and all, our volumes with them have also grown significantly. So we have already started negotiating our payment terms with our suppliers. We have also started shifting some of our suppliers towards LCs instead of advance payments. So those steps have also been taken. But yes, one of the challenges which we are facing is that quite a few of our suppliers are MSME players, and as per law, we cannot increase our payment terms beyond 45 days for any MSME. So that is one of the challenge which we are facing on that side. But yes, the efforts have already started in that direction. So that is on the working capital management side. Second is on the manpower and the overtime side. So we have on the manpower side, we have our indirect manpower, which is basically the daily wage workers and all, which we always plan as per the production planning and all. So we have done a bit of some rationalization on that side in line with the lesser growth forecast. We have been growing. We were projecting 30-35%. Now we are going 18 to 20%. So we have done a bit of rationalization on that side. Second is we have also put in second thing which we can bring in is the optimization of our equipments, basically optimum utilization of our equipments. So we have put in more stringent checks and controls on our equipment processing and everything to ensure that we are optimally utilizing, which helps in reducing our manufacturing cost. And
JJ, I will add
yeah,
one point. I'll give an example for everyone. So when we say optimization on the manpower, so there are three kinds of manpower. What we have: skilled, which is on the company role. Then there is semi-skilled, which is on the third party, which is also running our machines. And then there is unskilled, which is the daily material handling, or there are many, which is also a good number of manpower. So sometimes in COVID also this came as a blessing in disguise. So when the push comes, the good thing about our team is they're very responsive. And again, as a management, where we know that okay, the coming months are going to be difficult, the how we call it the funnel flow, wherein we tighten the tap so that the flow can be limited. So we in actually 3 months from May, June, July, August now, we have reduced that third party manpower by 20%. And though these June, July, August, our internal, I mean, the sale value has been almost the same. So we same in the sense what we did the same in April. So April we were still lenient because these measures were still not there. So actually, as compared to April versus August, we have done a higher sale. I can't tell the August numbers, but we've done a higher sale. But at the same time, July, when I say August is still running, but we have reduced the third party, the non-skilled manpower by 20%. On the overtime, we have reduced by 98%. So what our overtime bill was, so maybe, the efficiency was something which was, when you're growing, then you don't see in these things. But we were running Sundays, maybe absenteeism was higher, so that was resulting in overtime. So many things. So again, the flow was tightened, so we've improved that by 98% immediately. So apart from that, we also have efficiencies, what we call the per hour output on certain equipments. We have put a team to improve that. We are working on the tooling consumption improvement, wherein we reduce the, we are, as JJ explained, we are negotiating. Last 3 years we have grown 30%, 20%. So we somehow have been liberal with our suppliers, and now we are going back to them for better pricing. We are pushing our sourcing team to get cost reductions, what we call VAWE, value engineering, value proposals. So that push somehow, which we as a management could not sometimes focus on, now because of the customer demand, that efficiency monitoring is something which is really, I'm sitting at plant 4 days, sir goes to plant 3 days now, because we know that this is the need of the hour, and we have to keep these costs in check. Sales wise, whatever will grow, but margin profitability wise, we have to at least be stable. So yeah, this on the operating side, these are the things, of course, one of the things, but remaining, yeah, JJ, you can explain.
Thanks, bro. So, and third thing is on the, as sir has always explained that whenever we do investment, they start reaping results, giving results and all with the time lag. So we have been investing in our green energy initiatives and all. And I'm happy to share that whatever green energy initiatives we have started around a year back, now everything is operational, and that is already starting giving results to us. So we have already this offsite 4 megawatt of captive solar plant, which we had invested, which we had partnered with an outside party, which we have started. So they have started. They have already gone live from 20th of July of this year, and we have already started receiving solar power supply from them close to 4 megawatt. This will help us in substantial saving on the power side. Our in-house solar power plant and of 1.3 megawatt, that is also fully operational now, and it has already started giving results to us. Recently, we have also registered on the Indian Energy Exchange platform, where on a daily basis, one of our partner who is registered on IEX, they bid for the lower power units for us on a daily basis under different TODs. That has also started from first week of August. Substantial, I mean, a decent saving of our power from this initiative. So all these three initiatives on the energy side, power cost side, which we have started, have already gone live, and we are expecting. I mean, I don't want to share a number right now, but we are expecting a significant amount of reduction in our overall power cost from all these three initiatives. Then fourth is on the capex part. Yes, this is now, as we said, that slightly challenging times and all. So as Prabha shared, that Europe is now opening up from holidays and all, and we have already started. We have already started relooking at our budgeting exercise, and maybe by the AGM we should be ready with our new budgets and all. But we are contemplating right now. We are doing each and every monitoring of the capex which we had planned for this year, and we may come with the reduction in our budgeted capex plan for FY 24-25, and which eventually will help in reduction in our overall finance cost.
Yes, thanks, JJ. So go to next slide. This we have already explained that, but not explained fully, I would say. So this is something which we all should be proud of. I do not think many of the companies in the automotive scope of our size would be green energy certified. So we can say proudly that whatever we produced, there is a very minimal carbon footprint, though we are going to launch a very soon our sustainability vision, wherein we will declare our targets for carbon neutrality. However, a company for our size and scope, or in the Indian landscape, in the mindset, our Gajrola plant is now running on 100% green energy. Of course, it is helping us save cost, but our most of the customers are in export market, and there the sustainability consciousness is very important. Actually, we can now charge a premium to many of our customers for being the green energy producer, because that is something which helps us differentiate from our competition. We do have a 4 megawatt DC operational solar power generation through a third party, which we have invested in. And there was a press release also for the same last week. We do have around, sorry.
Also I'll add, this picture is actually from the actual site, which is in district Mahoba, Uttar Pradesh. And I'm proud to share with all the investors that since as per REDA, this renewable energy policy, so all this offset generation can be done only as a captive power generation. Technically, RACL has a 6% stake in this SPV. This particular facility is actually 15 megawatt capacity. Out of 15 megawatt capacity, 4 megawatt is for us. So technically, it's a captive power plant. And as per renewable energy guidelines, we are actually equity partner in this company. So technically, 6%, around 6% of the equity of this car. This particular SPV is owned by RACL. And now, since as JJ already explained, that from 20th July, this plant has gone live. They have already started injecting the solar power into the system, and we have started withdrawing the power in our factory. And in coming time, we'll start getting the returns also. And this is a long-term investment for almost for next 25 years. So, and these returns will always be there with us. Yes, Rob, if you can. And this right side picture, you already, all of you know, the actual plant, entire roof is now fully generating rooftop solar power.
Yeah. And of course, what is on the rooftop in our plant, this all is again OPEX. So we have not invested. We have a third party who is then managing, and then we are billing to them. So that way, this helps us without any capex, the internal 1.3 megawatt to reduce cost immediately. Okay, next slide. So as JJ did mention that despite whatever we are witnessing, there is still a capex which has to happen. Though we will contemplate that what is that capex number will be. We are contemplating to reduce, but capex will remain part of a growth company. And the reason is, of course, these are some of the updates what we have. We are in advanced discussion with a European pass car manufacturer for their new business for an opportunity in their existing new generation platform, which is coming, which will be all in the sense right now we have the business for only the electric sports car platform, but this would be the traditional ICE, hybrid and electric also. They are going to launch a car in all variants, in all models. And this, if we get this order, this will be a very big ticket for us, and they should really be clear by end of this year. We are in a very advanced discussion. As you know, we are investing a lot in the electric bicycle market. We recently participated in a exhibition in Frankfurt called Eurobike. We were amazed to see that, at least in Europe, children from the age of 15 to a person till 80 years of age was in that exhibition. Around 200 companies were displaying these electric cycles, and it's a huge market. And the cycle actually is roughly 3,000 to 4,000 euros. So these are expensive products. So we are working with a tier one who is launching a pedal assist e-cargo vehicle. So you have these delivery companies who are delivering goods. So these are electric pedal assisted, which has a battery, and then there is a drive by wire system. They are launching a revolutionary new chainless drive system on a rickshaw actually. And this is something which will be used or should be used for intercity goods transportation, at least in the Europe mindset. And it's a huge volume what they're projecting. So this is almost in the finalizing discussion. We recently also received a new business order from a German customer for the e-bicycle. As you know, the Noida plant capacity what we aligned was for an electric bicycle manufacturer, and we also disclosed the name called Pinion. So we received one more order from them. In the domestic, again, we are working with the two-wheeler OEM. So we still work with them, but we are working for their sub 400cc. So they are launching our gearbox in a smaller engine motorcycle. Of course, the active discussion is going on, but if that happens, this will be again a good volume business for us. And we will be expanding the Noida plant for this, not expanding in the sense using the capacity what we have deployed. And we also received orders from FCC India. FCC, if you know, is one of the largest clutch manufacturers. So we are going to make clutch gears for them, and Adler. Adler is again an Italian clutch supplier who works with most of Italian, US and Indian motorcycle makers. So we've received orders from them also, and the commercial supplies have already started, the sample development. So all of this in totality is a slide which explains that in the long run, we are still one of the preferred supplier. We are also, eyeing the agricultural market once again, since we know that the pass car or the two-wheeler market will be in the short run, the growth might be a questionable thing. We are not investing, but we are hunting very actively in the industrial segment. Sir and I are also going to US end of next month. There is a huge convention happening for one of our potential customer. Maybe if that business comes, that can come immediately, because that technology we have. Agricultural business is simple business. They are simple gears, shafts, and we already had a preliminary meeting. So there are many actions being taken to take care of the future and the short-term demand. And in the end, I think this is an important quote I want to leave you with, that if you want to enjoy the rainbow, you have to be prepared to endure the storm. So last 3-4 years, if you talk about the stock valuations before COVID versus now, and the company growth has been phenomenal, exponential, and it will still remain. But yes, one has to keep enduring the storm if we have to enjoy the rainbow which comes sometimes. And yeah, so I think that is it.
You aptly put this. Earlier COVID was the storm, and we got this 3 years of growth journey as a rainbow. Now European and American inflation is a storm, and we are waiting for the rainbow now to show again. Huh?
Yeah.
Great.
So then I think we can start with the pre-registered questions, and then we already have 3 people wanting to ask questions. So yeah, maybe JJ or Neha.
Yes. Can I invite Mr. Ayush?
Ayush is there. Yeah. Ayush, can you unmute yourself and ask the question? Okay, maybe he's not there. What is next, Neha? I mean, who is
Mr.
next?
Kiran.
Kiran, yeah,
Hello.
he's also raising. Sorry,
Hello.
Ayush is, yeah, Ayush, go on, yes.
Okay, Ayush is
Yeah.
here.
Am I audible?
Yes.
Okay. Hi everyone. Hi, sir, and hi, Prab and team.
Oh, hi, Ayush.
Hey, Ayush. Good afternoon. See you a long time in between. You were not there, huh? Or you didn't ask questions?
So I was
Previous,
there. I keep listening most of the time.
So you are so silent listener, huh?
He's the rainbow in the storm.
Yeah.
Yeah, Ayush.
I prefer that way. I think because businesses are hard to build the kind of business you guys have created, the kind of customers and everything, and all of us will go through those phases from time to time. So that's totally understandable. What is more important is that we are taking actions. So that's the important thing. So, sir, a few things that I worry about, and I had sent over email earlier. Prab, would you like to take them up, or how do you want to do
No,
it?
that's the point, Ayush. Your pre-registered questions you can ask again, and we will answer. So, because you sent a long list of questions,
Others
maybe
will also know the question. Yeah, exactly.
two questions, 2 important questions. Yeah.
Okay, so one thing which we have been seeing for some time now, and which you explained, is now the headwind you are facing because of the unpredictability in demand. But this has been happening not this quarter. This has been happening for the last few quarters. I would say that we had been aiming for bigger things, but somehow those things have not been playing out. And like you explained now that there's more deferral and this and that. The same thing was there last quarter also, and last to last. So where, like, uh, 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 now that you are in July, August, are you seeing any meaningful recovery, or is it still pretty dull as of now?
Actually, Ayush, Q2, unfortunately, or it is an incidence. This is actually vacation time in Europe, because like whole of Italy is closed for August. Europe, Germany was closed from middle of July. So technically Q2 is always generally very sluggish or remains stable. And since it was this time, there were a lot of declining trends. So as Prabhu explained earlier also, that when Europeans go on holidays, so they will not take any decision. They will only come back after holidays, and then they will give the real picture. So to answer your question, Q1 and Q2 is generally having the same trends because what we are producing in Q2, all the forecast was given many months back. But for Q3 and Q4, actually now Europe will be fully operational from this Monday. So eventually, next 2 weeks will really give us a clear picture which way the remaining months of the year have to go. All these customers are big brands. So when they come back after holiday, they also find that their balance sheets are under red. So then they will really definitely start pushing all the sales. So Q2 really, yeah.
But to add another point, Ayush, which you asked that, this sluggishness maybe we were facing, I don't think that will be the correct assessment. 6 months back, 3 months back, we were struggling to meet the demands because of capacity shortfalls. And that is how the vulnerability in the projections from our customers have been. Until December, November, if you remember, the gear grinding capacity was something which we were really banking on, and it came late, and many of the orders then shifted to January, February. So the customers were actually building a lot of inventory, and then eventually something happened at many of our major customer ends. When I say something, we just received emails, or okay, this has to be declined. They revised the schedules, and then they went on holidays. We actually were struggling. I was in Europe for at least 10 days, sitting at my customer's desk, that this is the confirmed email. 1 week ago, I will not name the customer, in I think 11th of June, they said, I need this material via air, and can you send me via air? And 25th of June, they said canceling all orders for next 4 months. And that is the kind of hustle the worry we immediately had. But then we went there, we understood the issues. They said there has been inventory corrections. The dealers are not picking up. Sometimes the projections, calculations somehow. But eventually, as I just said, the same customer opened up what he wanted to defer for 6 months. Now he says, okay, I will start picking from next month. Maybe not at that volume, but at a reduced volume. We were facing these signals in January, February, but we were not sure that it will happen so immediately. So not with everyone, but some of the customers, for example, one of our customer was going to be flat. This customer has grown 3 years year on year, 2019, 2021, and we were banking for him to grow. When we released our projections for this year, that customer we took as stable. Still, we projected 30% to grow, but actually that customer now is declining, right? So that is also one thing which we have to discount in that when we have very high growth plans, even the stable customers hurt, even the declining customers, of course, hurt. So such things, combination of again, we are not saying that it will be 50% decline, but that 15-20% which growth is not coming, 10% decline, so that becomes a 40% decline, right? When you're a growth company, if you don't grow, even stable looks like a decline. So that is something which we have to manage, but it's not a red alert. Again, people, as sir said, they are big companies, they have investments, they have huge corrections which they need to do. So in the short term, maybe this will something which we have to take care. But as I said, the first half of the year till September versus the second half, I think the second half should be 10, 15, 20% better than that.
Okay.
Actually, there's one more example, Prof. I was listening because we'll not name the customer. One of the customer got order from European military for 35,000 vehicles. And then suddenly, and the customer is producing maybe 120,000 per year. So 35,000 single order is about 40% of his annual demand. And they were to meet this demand within 3 months. And they were getting the material shipped by air. Sometimes the material cost was more than our component cost, but they're still getting it. But later on, military cancelled their order, or not cancelled, rather put on their hold. Now they can't really keep on producing trucks because they do not have this much space. So technically they shut down their shop for 30, 40 days, let the military take a decision. So these kind of volatility, even these big giants are also facing. Suddenly this geopolitical things are really troubling a lot of volatility. But I personally feel once vacation time is over, people are coming back. then they will be giving us a real stable demand for next 1 year at least. Because now until December, those people have to work rigorously. Then there is only vacation time of 1 week or so for Christmas. So eventually now within the next 2-3 weeks, the real picture will come. As on today, things are going at the same pace what we are witnessing now or we witnessed previous quarter.
Okay. The other, I think the business what we have seen in past also is that such cycles come and we do stabilize after some time. But I think the bigger worry this time is a bit due to the balance sheet position. Like if we see our debt has been increasing quite a lot. If you see the interest coverage ratio, it is low now. And also the other thing I've been talking about, I've written in past also is the inventory position. If we look at our inventory days, they have really gone up in last several years, and now like you're saying there's mismatch, it would have gone further up. So this is one worry that we have as investors. And what do you think or
no, actually, Ayush, in fact, JJ would have been able to answer more with the numbers, but generally I will tell you, this inventory is actually not increasing. As per Ind AS, new revised norms of Ind AS, everything until it is received at the customer's end, it has to be stock in transit. When our export grows, our transit stock grows. When transit stock grows, inventory grows. So this is beyond our limit, because if we are growing, like if we grew 30% last year or 20% last year, and out of 20%, the entire growth was actually in exports business only. So eventually our inventory days will increase. So inventory is not something which is only our raw material inventory or finished goods inventory. The real is coming on the transit stock inventory. But that cost of the transit stock inventory is built up into the costing. It's not disturbing our cash flow. Okay, number of days, what you're saying is right. As a financial person, you will be only saying yes, 20 days are high. But you have to really see that for any export shipment, my inventory, and one more thing, which really gave higher impact on inventory, because of the Red Sea crisis, the shipping time in Q4 was almost 100 days. And although now it has come down to 70, 75 days, that also is because we were actually pre-shipping the stocks. Otherwise, their line stoppage would have occurred. Customers raised their demands. Probably that is also one of the reasons for slightly leaner demands now, because when the Red Sea crisis a little bit slowed down, so almost 1 month of extra inventory has been now piling up at customers end, so they are making the inventory corrections. But in our books, in annual accounts as well as Q1 of this year, because of higher exports, these numbers are growing. So that is also one of the contributing factor. But now, thankfully, this Red Sea crisis has really little bit improved. And although it is still lagging by 10-15 days, but it was not, which was 40-45 days. So now you will really see the beneficial numbers will come. And if you have some numbers.
But you correctly said, so it's majorly because of material in transit, the higher the export component and the Red Sea thing and all. But yes, so that is Ayush expected to get normalized a bit. And of course, as I have shared with you, yes, on the inventory of steel and other thing and all, we have already set up a task force and all to basically look at any gaps and all which can be bridged. So we are already working on that. But having said that, the spike in the inventory days and all which you are seeing, it is predominantly because of material in transit.
But Ayush, to answer that, it is not that we are saying we are comfortable. We are already working on
Yes.
that. We have already identified that from, we don't want to name, but from steel and the RM side, what actions have to be taken. And in inventory reduction, there is one more reason. Many of these steels are special steel grades. So maybe if I need some small volume, the steel mill says, okay, I have to cast a special I have to do a special casting for you, so you need to pick up maybe the 60 tons together. 60 tons might be 3 years of inventory, but since this is a special steel, I take the inventory carrying cost. Now even that we are renegotiating with steel suppliers that hell with it. We need, if 5 tons, give us 5 tons, and we are pushing steel mills now that since it is a bad time for us, you need to support us. So such things which we might be earlier negating because we already had that cost built in, we are now also improving that. So it is not a status quo, because when you're growing, these things hurt, but they don't hurt that much. Now, since the growth is not there, we are working on these things. And this material in transit also, when you see now the domestic business to grow, so that should really help us improve inventories. I don't know, this is still not a public information, but we are also working with one of our manufacturer who might be now changing the terms to domestic, wherein they will be now picking goods from India, and the payment terms will be maybe reduced to very soon 30 days. So that company, we are in active discussion. So they will then take care of the inventory in the sea and the logistics. So such things we are doing to reduce the inventory and the working capital as well. I mean, improve the working capital. Okay, thanks Ayush. I think we answered a couple of your questions. Neha, और किसी का है pre-registered? Then we go to the.
Yes, sir. We have Mr. Kiran.
Mr.
Yeah.
Kiran Pranch.
Pranjpe. Mr. Kiran Pranjpe.
Can you unmute? Can you please unmute yourself?
Yeah, Mr. Pranjpe, you need to unmute yourself. I have allowed your mic.
Hello,
Yeah.
Mr. Kiran.
Maybe we can come back to him later.
Next one.
Mr. Anil Shetty.
Kiran is saying, sorry, I can't unmute.
Just one follow-up question on the balance sheet.
Yeah, Ayush.
We also want to keep pursuing new projects, clients. How do you think about that part?
Sorry?
Can you speak again?
Yeah, my follow-up question is that the debt on the balance sheet is a bit high now. It's almost more than 1.5. Pursuing new clients, new opportunities, we have to every time invest a lot into the projects. So how do you think about being able to do all that given the situation of the debt today on the balance sheet?
He's saying that any new customer we need to add, so we have to do capex since the balance debt is already, but him is on the higher side. So for new customer, we may have to raise further.
No, yeah, first of all, the customers which we are actually looking for, as Prabh explained to you, we are discussing with some US customer. So that is going to, many of our existing capacity will be utilized because, we invested a lot in previous years. So we now have a lot of capacity available. So eventually we are hunting for those businesses where our first interest will be to utilize our available free capacities. Of course, some balancing of equipment and balancing of capacities will always be required, but it will be only linked with the growth trajectory. But by and by, we have spare capacities available also. And one more thing, since we are a fully integrated unit, so even if we get any order today, it's not that it is going to start churning out business tomorrow. It will be for the coming years. So obviously, by this time, our existing customer will also report back. So then again, will be on a growth path. But yes, you are right. We invested a lot. So now our additional debt requirement may be there, but not at that same pace. We are like earlier what we were doing, what we are investing, we were making only 1.5 times or 2 times. Because our own focus is that debt to revenue ratio should be more than 2. So now we will be really focusing towards that.
And sir, one more thing, on the long-term debt side, our target is that every year our repayments would be more than the additional debt amount. So that is also, that those plans are already in place.
And as we already explained, we are reviewing our this year's capex requirement also. So our this year our target will be to substantially reduce our long-term debt carried to the balance sheet at FY'24-25. So these all actions are in place. Yes, Mr. Paranjpe is okay, or maybe Mr. Paranjpe, maybe you can disconnect and connect again.
No, I think his question he's written in the chat. He's saying that we should strengthen our balance sheet by issuing preference shares or QIP. Our interest costs are skyrocketing. So maybe it's more of a comment than a question. So
yeah, this is more on a strategy part. Because
yeah, so
let
we
this
hear
investor
you.
call be more focused towards our performance. These are all strategic decisions. Mr. Paranjpe, thanks for your message. But definitely these are our strategic decisions. And yes, at the right time, the right decision will be undertaken. Yeah.
Who else, Neha?
Then Mr. Anirudh
Pre-registered?
Shetty.
Mr. Anirudh Shetty. Mr. Anirudh Shetty.
Okay, I'm unmuting Anirudh. Anirudh, can you unmute and ask the question?
Yeah, hi, am I audible?
Yes.
Great. No,
Yes.
thank you for a very detailed presentation. This, really explains the situation and how you guys are looking at things. Most of my questions were answered actually, but just on the domestic side, I think the last 6 years this has been a bit muted for us. It's grown at I think 4-5% CAGR, but things seem to be picking up now. So, what's your outlook on the domestic side? How at what pace do you think this business should grow at? And I believe it's lower margin than export. So typically, what's the margin difference? And if this business really takes off, do you feel that the EBITDA margin aspiration that we have of 20 to 23% could that get impacted, or will still be able to kind of get to that?
I will answer you. Yes, domestic market for our company is we are getting additional business opportunities for domestic market, and give us maybe another 1 quarter, maybe Q2, end of Q2 or maybe end of Q3 latest. We are under advanced discussion with a domestic player for a big business opportunity. And when I say under discussion at a business opportunity, it's not we are negotiating the business. Business is already awarded to us. We are only discussing when to start. And it is a very substantial business. And good thing is that this business is not very low margin business. This is actually a product which we are already producing for a overseas European customer. Same product almost is going to be adopted in the Indian motorcycle. And right now, because business is already available with us, it's not that our we have already got the contract. The startup production timelines are not there, but moment that those timelines is at a final niche because the testing is going to be finished maybe within this month and or earliest next month, and then the real dates will come. And then when it comes, we'll really give you the exact numbers. And if really starts, it will positively impact our current year's performance also. And definitely that business, when it comes, it will not be really, of course, it will not be as good as any overseas business margins, but it will not be as low as our Indian domestic generally, because in Indian context, margins are EBITDA margins are not even 15-16%. So obviously, it is a kind of somewhere in between. So that will come shortly, yeah. And domestic market, as we explained in our presentation also, we already started supplying to this FCC India. This is also a FCC, world's biggest two-wheeler clutch maker. So we already started supplying to them. Mass production has started, and use of those clutches is again some American customers, some Italian customers, some Indian customers as well. So that also will, in the coming times, this will add more and more revenue to our domestic business also.
Got it.
And as such, domestic business is going more resilient as compared to today, European and US business. Yeah. The Indian economy is generally very, very stable. It's not having too many peaks and too many valleys.
Got it. Got it. My second question is more on, historically, like as Prab mentioned, we invest ahead of time in capex. We take a 3-year view, and we generally invest when we have strong customer visibility. So this is a year wherein probably there has been some deferment, but historically, has this happened before? And in such instances, what has our experience been? Has it been that, the customers typically, come back and honor their agreements with some delay, or have there been instances wherein we've actually missed out on orders because they did not
No,
honor the...
I will answer you in a very, very crisp way. One thing, although I am in this business for almost last 30, 35 years, and we are in export business for almost 20 years, until now, it was never happening that all segments are going down together. This is obviously happening for the first time, that all segments are going down together, because, we always maintain that we're a diverse company. If something goes down, something goes up. But this time it has happened that all segments are going down. So, but this has a positive side also, because if anything goes down, then eventually world will collapse. So this very clearly reflects that this is a very, very temporary measure and a temporary event, and this will immediately rebound back. But once, and to, your second question was that so far it has never happened that people have outrightly scrapped the project. At least this we have never faced. And even in our current situation, these declines or reductions have happened. Anything is being scrapped? No. No customer has said, okay, sorry, we are scrapping this project. So that way there is not incident even now. And of course, this earlier also was not there. And one more important thing is, all our customers are very, very robust and big brands. And you also know all these brands, even if they decline for 1 quarter, 2 quarter, next year, they will come back with flying numbers again. Because, if they really keep declining like this, they will vanish off the competition. So that way we are on a very, very safe betting ground. And we are not having any such real scare. Yes, this decline has happened and this is really going to be a long lasting, or it will really going to hurt our top and bottom line very badly. So this is very clear. And one more thing, that it's not that we are declining. Only thing is we are going to grow at a lesser pace. Because I tell you, the concluding thing should be that RACL is not going to decline the business. No. RACL will still grow, but maybe not at the same pace where we were growing past 3 years. And pace of growth may change, but growth will happen. But of course, if pace of growth goes little down, so of course some fixed costs, amortization and all, definitely it pinches the bottom line. But that always keeps your, because if we are having 25% EBITDA, even now we had a EBITDA margin of 22%. It's not that we have gone upside down. Our EBITDA margins have gone 3%. If you see best in industry in India, EBITDA margins are not even 15%. So that way we are still way ahead than the others. But rather this is a cushion with us. That okay, if something goes wrong, even despite that situation, we are at a very robust and very high numbers. It's for some time we are little on the lesser numbers, it's not a worry factor. Companies never work on a quarter-to-quarter basis. Okay, as an investor, you have to really see quarter-to-quarter or daily basis, because you have to really see which way the stock market is going. But industry or industrialists will never think quarter-on-quarter. Industrial will always draw a 5-year vision. That what I am going to be 5 years, and we are maintaining the same vision. So if we are not growing 35% this year, it doesn't mean that we will lower our bar. Our bar will still remain the same. We know we are going to rebound by the same numbers in the coming years. Because now, rather that time we will be having advantage. we already will be having the capacity. So this was my point to say. Prab, you wanted to add something to this?
I just wanted to say that, of course, if we say the decline in the growth, growth is there, but the percentage of growth is less. Maybe the 50% of that reason is because of slow adaptation to electric vehicle platforms. Some of our investments, when you say fixed asset turnover ratios, are not generating higher returns because the platform, the customer is not picking up, the sales is not picking up for those platforms. But electric is going to stay. If not this year, maybe in 6 months, 1 year, the product will sell. Customers will push money, pump money into marketing, advertising, maybe reduce cost to improve the sales of this. And the remaining 50, as we said, the Red Sea crisis, customers out of panic were picking a lot of inventory at dealership level. That is a short-term in correction at the supplier, at the dealer end, which is happening. And this is something which will improve as the inventories start to liquidate. And when the interest costs decline, of course, then even if the inventory at the supplier is there, in Europe or in US, 0.5%, 1%, interest rates don't hurt companies even if the inventory is lying at the dealer end. It's just that a lot of economic things, geopolitical, when they, of course, after US elections, we believe all of these should tame down. So in the long run, nothing is problem. Only this picking up from certain platforms is something which is creating this ripple. That's it.
Got it. No, thank you for that very elaborate answer.
Yeah, thanks,
Thanks.
Anirudh. So next, I think we still have 3 more hands.
Some people raise their hands.
Yeah, मैं कर रहा हूँ. Ankush, can you unmute yourself?
Yeah, hi. Am I audible?
Yes, Ankush.
Just a quick question. So earlier, when our growth expectations were higher, there was also an expectation that we'll repay some of the long-term debt this year. So given that the growth expectation for this year has changed, does that change the long-term debt reduction expectation as well, or it will flow eventually based on how the growth plays out?
Yeah, so Ankush, thanks for the question. But as we have explained in our presentation as well, this year capex budget which we had shared earlier and which was approved by the board, we are in process of revisiting that capex budget. Since as we have explained that European players are now opening up from the holidays, we are targeting to put up the revised capex budget, contemplating to put up the revised capex budget by the AGM, which we are planning next month.
Okay.
And there will be long-term. We are foreseeing a long-term debt reduction also. Because this year, how much debt we are going to be?
Sir, 60 crores of capex budget and 48 crores.
48 crores we are paying, and our long-term debt this time will be much lesser. So our long-term debt reduction will come.
Yeah.
Yes, it will be down. Yeah.
It will reduce. Net debt will reduce this year.
Okay. But sir, why are we reducing our capex budget if we, like, in most of the cases, the
No, we are not saying reducing. We said we are reviewing. We said we are reviewing. Only thing is, any non-critical expenditure which are not required for this year, can we defer them? We are not cancelling anything. We may defer them, but that all depends when we get the real forecast from the customers once they come back from vacation. We are reviewing it definitely, but we are not cancelling anything. We'll just be deferring it. Because if we can really optimize our processes, and as we said that, okay, our pace of growth may not be same 35% or 30% which we contemplated. Obviously, it will be little lesser. So obviously, if we can really manage with the existing equipment, why do we need extra? So this is how we are going to review it.
Got it. That was it. Thank you.
Okay.
Thank you. Thanks, Ankush.
Krishna Agarwal, I have unmuted you.
Hello. Am I audible?
Yeah. Yes.
Yeah.
Yeah. So one quick question just on the tooling expense that we said. So that comes under other expenses, or it's a GP line item?
Other.
Okay. Yeah. That's explain, I think, majority of the fall in gross
Yes.
margin. Right? Okay. And two broader questions that I have. So on the previous calls, we have said that ZF, one of our key clients that we are planning, they are planning to have a good amount of sourcing from India. So, what's your view on that because of the China plus one strategy or your Europe plus one strategy? So, how are things on the
See,
ZF
ZF
side?
is ZF is a tier one, so their end customers is what they will bank on. End customers, as we just explained, I can't comment of China because we don't work with ZF China or their China volumes,
Okay.
but we work very much with the European volumes and US volumes. That, of course, the end customer in some platforms, I and ZF will be selling to the same customer. So whatever heat we are facing, they're also facing. So of course, I do not know what their plans for
No,
their
so my question is more towards India sourcing plan there. If they're, let's say, declining on the customer side, that's an industry trend. But on the sourcing, if they're planning to increase from
Yeah,
India,
yeah, of course. They don't have much of bigger operations in India. India, they of course work with the let's say commercial vehicles or the windmills. So in India plants, ZF has only couple of plants. There we in any case don't compete or work. But for the India sourcing, they will use those parts for their end customer. So of course, if the end customer is selling, they will
yeah.
keep sourcing higher from their preferred countries, and India still remains their preferred country. That is why we are very actively growing with them. But in general, what their growth plans because of this decline, if we are facing similarly, of course, ZF is also down for us
Yeah.
because their customers are down. So that is a ripple which will move to N tier. So their sourcing, whatever were keeping in mind what their customers were selling. So if there is a short-term correction at their customer end, it will also have correction at their sourcing end. But India still remains their favored country for sourcing. They have a big office. They're expanding their team and all that.
Okay. So that is intact, the plan to increase
Yeah,
Yeah,
sourcing.
that
yeah,
is
yeah.
intact.
Yes.
ZF has a very clear policy to source from India. Eventually, and leave aside ZF, it, this is our general perception that automotive components, India has a big upper edge in coming times for exports to Europe at least, because we are eagerly
And
awaiting
US also. If
FTA
they
of the Europe also, because Europe is contemplating seriously FTA with India, and I tell you, Europe is willing to sign the FTA tomorrow with India. Rather, this time India is dictating their terms, and this FTA happens. Believe me, we are really very enthusiastic that Indian component market will get a big business boost to the European markets. And US, of course, let's wait for the US elections. I particularly feel after elections, the US economy also has to grow, and India always have been a preferred destination for the US buyers. So that way, India has a good future as a country. And the automotive segment, India's strategy is going to happen very, very strongly because China factor is literally creating big opportunities for us because, to be very honest, Europeans and Americans are not going to stay only with China. China plus one has to remain. Who happens plus one? This all our political leaderships have to
no
play the
even
real game. Yeah.
even there was a news last week that the imports from China for electric vehicles within Europe, the duty is higher. And also, since Tesla has a plant in Beijing and they're not able to sell for China, they're exporting out of China to Europe. So the Tesla which is imported from US will have a lower duty, and the Tesla which is imported from China will have a higher duty, but that duty will still be lesser than a BYD being imported into China. So of course, all of these things become favor for India because then they want to de-risk.
And the gap is 28%.
Yes.
Tesla from US
Oh,
is 9% and from China is 37%. 28% duty gap. And in the same news, there was one more item.
Yeah.
They say leaves at a duty part. All the Chinese e-mobility things will be into a serious scrutiny. Europeans are also very, very particular now that for producing the electric car, how much carbon or how much green resources you have used. It's not that you produce the electric car and for producing electric car and green, how much green initiative you have taken. And China has a very, very poor track record for this. Just for the investors' information, we bagged this content from a German passenger car maker. Their first requisite was you will get only the business if you are 100% green electrical energy compliant. And I am proud to say that in UP, we were the first company who got that accreditation from UP government for getting energy compliant. Now, Chinese companies have a very poor track record on this, and Europeans are now digging these wells. So eventually, China is going to face very serious headwinds in coming times in Europe. And of course, opportunities are there for other countries. And how strong we are as a country, we are able to do it. Yes, only time will tell. But yes, we are quite optimistic.
Okay. So yeah, so that help us in understanding that even though there might be slowdown in international market, but if India is sourcing increase, so we will have a good growth expectation.
Exactly.
And yeah.
Yes.
And
Exactly.
sir, one question. So from long that I had that we had been for Kubota, we had supplier in Japan. We were the first one to supply to Japan uh, in the initial years of our turnaround story, and then now Kubota has joined hands with Escort. So how are we looking at it, or how like what plans do we have there? Are we in the
I will
supply?
tell you, there is a further side to it. First of all, we are already supplying a lot of, and that's the reason our domestic market is growing. Scott's Kubota actually is our existing customer already. We
Yeah.
are already supplying to Scott's Kubota. There is a further news item in the market. In fact, I had put on personally on my Twitter account also. Scott's Kubota has now signed up a MOU with government of UP to put up a greenfield investment in UP, and they have announced an investment of 4,500 crores for their own tractor plant or the engine plant. So you can understand that if we are working with them for last 21 years and now we are based in UP, so obviously first hand advantage will come to us, although it will be coming for future. They signed
Yeah.
only MOU now, so creating a new factory and all. So that relationship which started from Kubota for last 21 years. So in India, we already started for Escorts Kubota India, and this new plant, when it comes in UP, it will create new domains for us because we will, because now yet they have not announced the location, but internally I know know the location also. So eventually we will get some advantage out of that business also. But these are all the futuristic things.
Okay. And on the margin front, we would be similar for these product, or it would be quite different.
That you have to understand. If you have to compete against Mahindra and compete against Punjab tractors, not me, but Escorts Kubota, obviously one has to be on the margins. But one thing is very clear, which we will have a upper hand advantage. These Japanese companies are overseas companies. For them, cost is not the only point. For them, quality is much more important. Where we have an upper edge. Because
Okay.
they say, in our engineering terminology, they say QCD is always the norm, okay, quality, cost, and delivery. And now they have add QCD, So technically now cost is one of the criteria, but biggest criteria is quality, then delivery, then how you are managing the project, how your response time, and then sustainability is also one of the issue. And Indian companies have, because since we were exporting historically, so we have already crossed these bridges. So when Kubota type of companies grow in India, so they have to, of course, compete against the Indian makers, but still they will not leave their own basic core ideology of a quality supplier. So definitely they will always look for a quality supplier, and we have an upper end. But yes, it's very true that we have to compete against all Indian makers, so obviously there will be some pressures. But yes, we have an upper edge.
Okay. Okay. Thank you so much for answering in detail. That
Thank you.
that was the two question. Yeah. Thank you.
Okay,
Okay,
Prateek, last question. Prateek, I've unmuted you. Can you ask your question? I mean, can you unmute yourself?
Hey, hi. Thanks for the opportunity. Uh, Hello, am I audible?
Yes.
yes, please
Yeah.
go ahead.
So my question is more on the 40 crore spillover we had last year because of the shortage on the capacity, right? The delay in the arrival of the machine. Uh, are we seeing the slowdown impact even on those sales, the 40 crore sales?
You are right. That is also one of the customer. I already told you that they got orders from military for 35,000 trucks, and they were really pushing the material by air, and incidentally, that order is on hold now. But this is subject to review once they open after the holidays. As on today, yes, your question is right.
Okay, got it, sir. And so, you in your initial comments, you highlighted that you are seeing some opportunities in US and you are at the advanced talks with them. Can you just briefly summarize where are we in our journey with the OEMs in US? Because
No.
largely today we are based Europe based, right? So
Yeah.
can you help us understand?
No, US is
You
not
are right.
advanced.
You
Sorry.
are not, as probably we are just going for the first time. What they have called up, because one thing is clear that they selected only 4 suppliers from India for that convention. So, and that is also one of the, I think, first or the second largest tractor manufacturer in the world. Now, they have done a great, they might have done a great in-depth market study. We never had any prior interaction with them, but it was a by name invitation to our company. And then only 4 suppliers from India were selected. And of course, it is a global convention. So we are not saying that if we go there and we'll get business on platter. But yes, you can understand that if they are calling all the way from other side of the globe to just come and meet at US, you can also imagine that they have just not called us for a cup of coffee. Obviously, they also might have done their internal home. So we are quite optimistic for the outcome of that visit. And yes, it will be a substantial business. It will not be a small business because they are a big player.
Got it. Thanks, sir. Just if I may squeeze my last question, what's our current capacity utilization?
I think Prabhu should answer this. He is spending now 4 days.
See, I think we've answered in past also. Capacity utilization is different for all processes, but
Yeah.
in general, we are right now operating with, of course, the reduced volumes. We have around 65 to 70%.
Got it. Thanks. And our peak capacity utilization will be anywhere around 85 to
If you
90%, right?
if you add Sundays, there will be 110. But with the given number of weeks,
But now
yes,
80% is the norm.
80 to 85. Yeah.
Got it. Thank you.
Okay.
Thanks,
Okay. I think we still have 10 minutes. So Prateek is done. Yeah, I have one question from Randeep Kapoor. Randeep, can you unmute and ask?
Yeah, I'm muted. So, thanks for the opportunity. I'm new to your company, so kindly bear with me.
Yeah.
Sir, we supply automobile components for the entire life cycle of the vehicle. So I wanted to know what provision is there in the agreement with the customers, which takes care of price rises periodically, so that takes care of inflation as well as we maintain EBITDA margins.
This is a very, very tough question to answer. No customer gives any contract, and it's not only with the RACL. This is a global policy of the customers that once they give the order, the life cycle of the volumes is committed. The life cycle of the price is also committed. But raw material indexation is always there. If raw material goes up, customer will pay. If raw material goes down, we have to pass back the advantage to them. But we always have some advantage into foreign exchange indexation also. So sometimes there's a foreign exchange indexation mechanism also. If we get the benefit, sometimes we have to share the benefit 100%, somewhere to some percent, somewhere customer says, okay, you don't disturb me. Gain is yours, your loss is yours. But this is a global phenomenon, and normally, but one thing is very clear, these customers are again big brands. For them, continuity of supplier is more important than saving few bucks. In between, if there are any unprecedented inflations, they always take it. Like in COVID time, there was a huge inflation on account of raw materials, on account of logistic costs, and every customer compensated to us. Once the thing eased down, they withdrew those compensations. So, they are very, very ethical systems and very, very strong contractual obligations are always there. But there are no such inflation adjustment mechanisms. But, there is a silver lining also. Once you start the production, mechanical manufacturing is such a thing, there is always scope and room for improvements. You can keep on improving the productivity, new tooling solutions keep on coming. So cost keeps on coming down. And here comes the role of engineering also, where we have a very, very strong base. We keep on optimizing our processes by all means, by adopting better tooling, by adopting better technology, by adopting better utilization of resources. This is how we tackle the inflation. And of course, our volumes is always the advantage.
Okay. Thank you so much. Thank you.
Thank you.
Thank you. So if there are no questions, Rob, I think there are no more people now. We can, today, it really crossed almost half hours.
I think there are two questions, but we can finish also.
Okay. Okay, if there are any specific questions other than what we answered is fine. Otherwise, we can close.
Okay.
Any other member wants to ask any new question? If there are repetition, then we can really. और प्रॉब अगर दो आदमी है तो यार नया
पहले एक कब दोगे ठीक है लेट्स टेक लास्ट क्वेश्चन साकेत
यस
साकेत कैन यू अनम्यूट
yeah namaskar sir and thank you first of all for a very detailed conversation sir काफी विस्तृत रूप से सर आपने सभी प्रश्नों के उत्तर दिए हैं सर and it is good that we are recognizing not only the situation but also working hard to improve on the same. प्रभ साहब जैसे आपने ये जो पावर एंड फ्यूल के पॉइंट पे कहा था कि उस पे हम एफिशिएंसीज ला रहे हैं और रिडक्शन ला रहे हैं तो व्हाट इज आवर एनुअल पावर एंड फ्यूल कॉस्ट करंटली
Sir, Abhi, we just released the annual report last week. There is a balance sheet, there is notes to accounts, everything is explained there. I don't have the number handy as of now, but it is mentioned separately, the fuel and power expenses there.
अभी जो आप स्ट्रक्चरिंग कर रहे हैं in terms of the solar and the agreement also with the developer, in percentage terms किस प्रकार की saving हम expect करते हैं going ahead?
I think annually it should reduce by a lump sum of 1 to 2 crores, right?
I think 1 crore because this year we started only in July. Because 20th July our captive power offsite generation started. So this year it will be lesser, but otherwise 1 crore will be the actual saving minimum at least.
And what is the investment we have gone through for this 1 crore annual saving?
For offsite generation, we actually, as I told you, we invested as a equity. It's not it's a 1.4 crores we invested. So technically our ROI will be hardly 1.5 years. And this money is our equity participation. So after 15 years, this money has to come back to us.
And said, as you mentioned that because of some cancellation and rather the deferment going ahead, what would be the amount lying in transit or inventory? The amount in the inventory as on June?
No, so there will not be there will be no reduction on that. So whatever inventory that goes to our warehouses, customers usually keep 6 weeks of safety stock. Maybe that safety stock will now be extending to 8 weeks, 9 weeks. That's it. But the new production, the fresh production, that is something which is facing the decline. What is already shipped, what is already in transit, that the customer will honor and accept. Because most of the cases...
we are actually very tough with the customers. One of the customers, because we told them that contractually we have a system that we have to keep the safety stock of over there of 9 weeks. So we wrote them a very strong email, 9 weeks is your contract. and anything beyond 90 days, which is our lying warehouse, kindly you pick up and put in your own store and pay to us. So, and they are more or less agreeing to it. So technically, those customers, we are also tough with them, and they also mean business. So they will also not budge from their contractual thing. You know, working with Europeans is an advantage. They always follow the rule book. So if anything is beyond the inventory times, they will obviously pick up the stock. So eventually, we will not be at a loss at a longer period. Inventory also will be going to come back at the same pace like before.
And
Okay,
last
that's
point,
it.
Jen,
Sorry.
yeah,
Yeah,
that's
okay.
it. That's all from my side. But Jen sir, you mentioned this year the current maturities is 40 crore. That is what is repayable.
48, 48.
And that will be, we will be paying through our cash accruals that we will generate for the year.
Yes.
And by that amount, हम अपना capex जो भी plan को जो revisit करेंगे, after that number only we will be knowing what the net debt number would likely be.
Yes.
And this,
but in any case with the increased capex also जो हमने साल के शुरू में प्रोजेक्ट किया था, उसके बावजूद भी नेट रिड्यूस ही होना था. तो अब अगर हम वैसे ही रिड्यूस करेंगे तो फिर तो 100% ही रिड्यूस होगा.
तो हमने डेट जो प्रोजेक्ट किया था 45 करोड़ था, रीपेमेंट 49 करोड़ थी. तो एनीवेज हमने 4 करोड़ का रिडक्शन प्रोजेक्ट किया था, बट
maybe reduction can be higher if now
this reduction will be further higher. And of course it will reduce our finance cost also.
Yes, yeah.
ठीक है साहब, बहुत बहुत धन्यवाद सर सभी विस्तृत जानकारी के लिए.
Thank you Saket.
Thank you Saket.
Okay, Neha,
so that's it.
Okay. On behalf of the management, I would like to thank all the participants for joining and participating today. Thank you.
Thank you to all you, and thanks for bearing with us for almost these 2 hours. And keep your confidence and trust regularly in us, and your investments and your company is in safe hands. And we are working 24/7 to again, I will not say that bring back to normalcy, to bring back our growth trajectory. So let their message be very clear that RACL will still be growing against all the headwinds. Only we will be reducing the pace of growth. So that is a message which we want to give. And please stay confident, stay trust with us. Thank you.
Thank you.
Wish you good.